Welcome back everybody, and today I'm doing a video on smart money concepts, and we're going to talk about liquidity, stop hunts, order blocks, and how these all relate to price action and what are the different ways you can look at it. This is all my opinion, and if you don't know about what are all these stop hunts, liquidity grabs and all of that, there should be a video popping up above that explains that and my analogy of that. But I want to show you guys how this relates to price action and how, different ways you can look at it. This is how I look at smart money concepts, and this is my bias on it, and this is what I think about it. So I definitely advise you to watch this full video if you haven't already. If you find my content valuable, then definitely consider subscribing and liking the video. And without further ado, let's get straight into it. See you there. So section 1 of this video is gonna be about liquidity hunts or stop hunts, grabbing liquidity in the markets, right? So I'm just on GJ now. I have it marked up, and I've been looking at GJ and it came to me. Now personally for me, you can see these wicks accumulated down here at the bottom of GJ, right? And this can be liquidity grabs, right? We can see a clear order block here. Price has mitigated, came and tested this order block here, and is now continuation. Now that is a smart money concept in a way of thinking about it, right? And that's a way to generate your bias, right? So you could be looking to get an entry within these wicks here. Why would you get an entry within these wicks? Because obviously price came on a bullish trend, it came down, made a correction. It made a correction towards the order block, created wicks, and these wicks are essentially stop hunts, right? And you look to get an entry. But for me, to wait for all of this, you're waiting for price to come back and mitigate the order block, right? But you missed out on all of this. So for me, I'm looking at it in a simple price action matter. I look at this as a range, right? Price broke out of the range clearly here, right? We can see that we had a closure. If I just move the support slightly up like this, we can see that price created a range here, like so. Price closed outside of the range, stops below the previous candle. You get the continuation to the top side of the range, right? Which you can see in previous history from having clean candles. Now you see price found a resistance, right? So price found the first resistance up here. I don't want to take a sell because it's on a bullish trend. But here we can see price found a support down here, right? So we can see price found a support. Then price came back and retested that support. As soon as it broke the wick of that candle, we can see that price continued up. But this is all areas that I'm not looking to buy because it's very messy, right? But here we can see price created a range essentially on the lower time frames. This has been a range. Price closed outside of that range, and then what do we get? The continuation. So before your orders have been filled somewhere down at the wick, and yes, smart money, you do catch like the single pip, right? You catch the whole pips of the move from start to finish because that's the technique you're using. But personally for me, I don't need to catch the whole move because I want to be consistent, right? And it's more about being consistent than being catching the whole move. If you can be more consistent, then in the long term you will be more profitable. And this is why I'm sharing this, and I hope you guys can stick around, and don't forget to like and subscribe to my channel, please. That helps out a lot. And if you find my content valuable, I just have to say that stuff, just trying to get some valuable content out there. Now again, getting back to the point, I don't need to catch every single pip of the move because personally I just want to catch the momentum of the move, being in less drawdown and so forth. So we can see here in this strategy, I've caught, not a strategy, but the style of my simple price action thinking, I've caught the clean move up and the clean move down, right? And now I have two trades. But for you guys, you have, waiting for smart money to come and mitigate this order block here, and then you have continuation. Yeah, you will probably catch the long-term move. But in that short term, I have taken two trades now. And now if you look, right, all this was for me looking at a simple point of view is it's creating an order block. All price has done is it came down, right, and price created a support, right? Price has not broken the support. Price closed above the support. And now we're continuing because looking left, we have clean area to fill and price has filled that range. Now this is during Asian session. That's why we've seen a bit of slow movement. But we can see coming into London, price closed above the range. So this is another trade, right? You guys trading smart money would have already been in the trade, right? But remember, I want to be in and out of the markets as fast as possible, right? And we can see price closed above this area here. Looking left, we have this huge candle here to fill. So what happened is that price came down here, and look, this is an equal bottom, right? You can see this is a double bottom or an equal lows. So there is definitely a lot of liquidity sitting under that, right? But out of this move, that liquidity hasn't been hunted, you see. Now, so this is the thing. So if you were waiting for this liquidity to be hunted, you have to wait till maybe tomorrow or later on in the day, and you waste potential opportunities just trading with the simple price action that the market gives you. I do believe in smart money. It's one of the best ways, to catch the whole moves, and it is a profitable strategy. But I'm just also giving the opinion of how I see both, and my opinion of just seeing smart money as a simple price action, right? So looking here, right? So what happened? We created a support here, right? So we broke out of the range, and then we created a support on the lower time frames. We started to drive away. This candle opened, retested that support, and then what happens, as soon as price broke the wick of that candle, it was off to the races, right? And then your trade would have looked something like this. You would have a buy stop at the top of this candle, like so. After you see the candle, once your buy stop gets triggered, you would have your candle under the current candle low, and then you look to fill the top of this range. So you can see that this is another order block, right? So now we have another order block at this area here. And you can see that order blocks, what happens to price? Well, price came up, it tapped that order block, and you've taken the trade at the order block, because in your eyes, this is a clean move for price to fill. Price action should fill that move, which we can see it did. And this is your resistance. So high chance that price, when it does reach this area here, it should just basically, you should see a reaction. Same as the order block. And we can see once it tapped that order block, we can see it started breaking down, and all it's doing is it's showing, and as we expected before coming to that order blocks, this would have been a resistance, right? So we've taken the profits from the price driving towards that order block, and all our bias was based on the entry of this area here, right? For price to continue up, we've secured 12 pips. So now out of all of that trading session, out of this huge block of a range, so now if you look on the higher time frames, this is just a range. So we've taken the trade here, we've taken the trade down, and we've taken this trade here. But people who are trading smart money might have taken one trade here and maybe the short of the order block, and now got stopped out because it's not following the trend. But this is what I'm saying. The strategy is profitable, but it's what you're more consistent at and what you have your appetite for, right? So now that we've come to the top of the range, we've rejected the top of the range. So this is telling me, is this a stop hunt? No, because I can't see anywhere where it is stop hunting. What is this? Well, this is a rejection of the order block, right? We can see that maybe price comes down and fills the bottom of the range. I'm not interested. Within this, you've got a lot of trades. And this is what I'm trying to talk about smart money. Now, it is a really good concept. And I'm talking about GBP JPY here, which is like, you can consider a minor pair. If we go to euro dollar, this is not going to be the same. And I do agree, trading euro dollar, it will be great to use smart money concept, and you will probably be more profitable trading euro dollar with smart money concepts because of the way it moves. Okay, we had this huge move here, but no entry based on my method. 30-minute. Yeah, I mean, you could argue an entry here, but it's not the cleanest of entries. Same thing here. I mean, you can see that it's following price action, right? We had a range here. Price closed above. Look left. We have this candle to fill. Price filled that candle, you see, and that's the move that simple price action. We're looking to just catch this move here, and that's it. We're out of the trade, and we can trade more consistently and stuff like that. Again, I'm not against smart money trading. I really do think it is good, but it's very complicated and it takes a lot of discipline and a lot of time to learn. And I'm sure a lot of you won't argue against me with that you can't learn it in 2 days. But it's just different ways in looking at the market. So I don't think there is one correct strategy. I think it's how you're comfortable at looking at the market. And my goal for this video was just to talk a bit about smart money and hope to open eyes to some people who are trading smart money but struggling, right? And just showing you that smart money is one way to look at price action. Simple price action that I'm trading is another way to look at price action. At the end of the day, they're both profitable. And in my eyes, I don't need to catch every single pip of the move, but in your eyes, you might want to trade smart money because you think long term, if you're looking to catch huge amount of pips, yeah, then I think smart money is the best way to go. But if you're just looking to try scalp and get, your secure amount of hour per day and secure a certain amount of pips per day based on your trading, then the best way to go, I believe, is, just trade simple price action. You can't fault it. Everyone looks at the market differently, and for every trade, there's another trade being taken. For every move, there's a trade being taken within that move, right? And for every buy, there's a sell, and for every sell, there's a buy. And this is what I want to portray, is that if you're trading smart money, then think about, maybe looking at, and if you're struggling, look at maybe other opportunities like simple price action. But at the end of the day, I just wanted to talk to everyone about how I look at smart money. And I personally, I don't trade it, and I keep it in the back of my mind. I've looked at it before for quite a while, but I found myself more consistent and more profitable just trading simple price action, because during simple price action, you basically have the opportunity to take the trades and make it simple and be in and out of the market as fast as possible and manage your trade, right? I mean, we can see that the trade I was showing earlier on, which was on the 30-minute here, this is one 30-minute candle. So your trade lasts 30 minutes and then you're out of the market for the day. And that's the thing. If this is long term, you don't want to be staring at charts all day. It's very difficult to stare at charts all day. It's not consistent. Maybe you like doing it, then fair enough, right? But I find myself being able to take more trades using using simple price action concepts, and that enables me to be in and out of trades fast, and be more consistent, which is what I find the most important. Being a trader is having a plan, having a playbook, and being the most consistent person you can be. And yeah, with that being said, I hope you guys have stuck to the end. And if you have stuck to the end, then yeah, that's great. Thank you very much. And without further ado, I think I'll end the video here. Please let me know in the comments below what type of video you would like to see in the future, and tell me if this video was useful or not. I just thought I would give you a breakdown of comparing the two and how they can be viewed. And yeah, with that being said, take care, trade sharp. Until next time, peace.